Hello traders, Gary Wagner here. Approximately 11 a.m. in Honolulu, the 10th day of November. It is Thursday and this is the daily report for gold and silver. It's another roller coaster ride that we are witnessing. We currently have both precious metals well off of the lows. However, they are trading under substantial pressure. Currently, we have 1760 and 1762 COMEX and spot current price on gold. $34 and change, that is our current price on silver. We are looking at our daily chart in straight candlestick format. It is the spot or cash market of gold. Of course, we did pull profits yesterday when our stop was hit. 1768, that's where we moved the stop to. We were in, I believe, at 1739. Difference about $30 on the trade. Now, market is a little bit lower. It has hit an intraday low, as you can see, of around 41. And my question, and this is why I have been reluctant to re-enter the market or to issue a signal just yet, is I'm trying to determine if this is going to be our low, this 1741, or if it wants to take one more stab, let's say down 1727, 1728. That would be the resistance, or excuse me, the support area that I believe would be the absolute bottom of the market if in fact it did trade lower, and that would be roughly in this area to this low of this candle. Now, we're currently long our silver. I'm looking to dollar cost average, and I am looking to re-enter the market in gold from the long side when I believe that this wave 4 has terminated. So how are we looking at our current wave count? Well, the standard wave count that we have been using is this is our wave 5. We get an A. And our B is what's called an unorthodox top. It does go above it. And then this long C. Within this ABC, it is very possible, because that is a intermediate count, that this is all contained in a major A. That is what enabled us to forecast really a good zone or target for this last rally in gold, because we were simply looking at the fact that B is typically 50 to 75% that of the move seen in A, which took us between about 1728 and 1809, right in that area. The high that we actually hit, 1802, significant and does fulfill the termination of this particular B wave, except for one fact. My current belief is that we will probably have one more upside leg. In other words, what I'm looking at is in terms of a current count, and this would be intermediate, is 1 and 2. And then within this third, in other words, a minor count, I have 1, 2, 3, this is currently 4, and I believe that we're still going to get a fifth wave, and that fifth wave is probably going to be the one that takes us 1824 and above. That is my current belief. That would terminate B, and if we are correct, we will have one final C wave down, and I won't even fathom to begin to calculate where that might go, and if that is going to be the correct direction in gold. Because the other way that I have seen the count drawn recently is there is a faction of Elliott wave technicians out there that believe that this ABC was a truncated but was the major ABC, and that what we are in fact witnessing now is a brand new impulse phase, which is going to be composed of a total of 5 waves. The 5 waves, as I said, we have 1, 2, 3, and this puts us in our major 4, and then 5. This, of course, once terminated, would take us into a much shorter ABC correction if it was an ABC off the intermediate. I wouldn't look for nearly the kind of correction that I would if in fact what we are going to see is a major C that takes us to, even a flat would take us to 1532, a truncated would take us back to around 1678. My personal sentiment, and I have been wrong in the past, but my personal sentiment is the fundamentals, simply put, are absolutely too bullish to allow this kind of a market to sell off. Now, I say that with a caveat, and the caveat is that we've just witnessed gold go from 1920 and sell off $400. Do that from, call it, the beginning of September, and do that all in a span of 2 to 3 weeks. That's drastic, and we really didn't have a fundamental shift then. So, traders, anything can happen in the market, but what I do believe is our most plausible scenario right now, one that we can still really count on, is going to be we will experience, as I said, 1, 2, 3. This should be 4. I believe that we're probably close to the bottom on 4 if we haven't already hit it. And then our final 5. The 5 will take us to new ground in terms of this wave. But whether or not we'll surpass the record high, that's something that we'll have to look at a later date. Traders, we are looking at a gold chart and a silver chart, side by side, both daily charts. As you know, I have not been as bullish overall with regards to silver as I have with the gold market. However, we have to note a couple of very, very strong observations. When we take a look at this longer term trend right in here, you can see that the low did come below it, but it is above it right now. If we maintain along that tact, I believe that this next challenge that we have, in other words, the next time it challenges $35, my sentiment is it will in fact take it out. Another interesting thing, you can see this 3-river evening star formation, then you get the down and yet another doji today. If that's followed by a green candle, you get that alternating set of conflicting signals like we got in gold, where we had 3-river evening, 3-river morning. Very interesting market. Now, the reason I've got these up side by side, and I've tried to line them up as best I can, you can see that they're following roughly the very, very same course. They both peak, hit their tops, $44. This, though, is a new record high where silver was unable to do that. But when you take a look at how it sells off, the range from the body to the low, the period of consolidation, the forming of the bottom here and here, you can roughly see this as being C, 1, 2, and in the same way, our count 1, 2, 3, and we are currently in 4. 4 would take us to, I believe we've actually seen the bottom. It was able to find support above 32.90, so call it $33 per ounce. That tells me that there is a real opportunity once again to go ahead and challenge $35. If on a closing basis we can see this market move above it, the next real test is 38. My personal sentiment or target for silver right now is between $40 and $38. That's the upper level targets that I have, and that of course is all contingent upon it trading above $35. Traders, I believe that we were fortunate in that we pulled out at the proper time in the gold market. However, I believe that this should be a short-lived corrective wave, just like we saw in this wave 2 here. I think we'll see a similar type of price action, and then, as I said, a final clip up before we enter a short ABC correction. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.